Most investors will ride their 1000 XRP bag to the moon and straight back into the dirt because they're addicted to the pump and terrified of the exit. And while the 2026 market is screaming about billion-dollar ETF inflows and price targets hitting $25, the cold truth is that portfolio size is irrelevant without a mechanical plan to lock in the green. Now, this investigation today is going to break down why your 1000 token position is actually a high precision strike force. If you stop acting like a holder and start acting like a professional trader, that is. So over the next 6 chapters of this investigation today, we're going to be stripping away the hopium to give you a clinical, step-by-step scale-out blueprint to recoup your initial capital, secure your moon bag, and escape the emotional trap that keeps retail investors underwater for years. You're about to get the exact roadmap needed to turn paper gains into real-world freedom before this cycle concludes and the liquidity vanishes forever. Your bank account doesn't need 6 figures of crypto to change your life, but it does need a strategy that actually works when the green candles start flying. So you don't need 1 million tokens to change your life, but you do need a plan to keep the money that you make. So it is April 2026 right now. The SEC has finally labeled XRP a digital commodity just last month, and those billion-dollar ETF inflows are hitting the ledger daily. So you look at your bag, exactly 1000 tokens. It feels small compared to the whales, doesn't it, right? But you see people on social media, they're going to be posting about their massive positions, and it's going to make you feel like you've already lost. But here is the cold, hard truth. Most of those whales will ride their portfolios all the way up and all the way back down to the floor. They have the size, but they don't have the exit. Most investors treat crypto like a roller coaster that they forgot how to get off. This chart shows a typical 500% gain during a bull run, followed by a 90% crash. Without a sell button, your paper wealth is just a temporary hallucination that vanishes when the trend flips. If you are holding a modest bag, then your biggest enemy isn't the market makers or the Ripple supply overhang. It is your own ego. So you're waiting for that 1 in a million miracle that turns 1000 tokens into a retirement fund, while the smart money is already moving. They aren't looking for a fairy tale, they're looking for liquidity, and if you want to join them, then you need to be where the data is, and that is a free Discord link that's in the description below. For all those that want to learn, there is also a paid membership for real-time alerts and deep technical analysis if you're ready to kind of treat this more like a business. When you genuinely accept the risks, you will be at peace with any outcome. When you're at peace with any outcome, you will experience a carefree, objective state of mind where you make yourself available to perceive and act upon whatever the market is offering you, from its perspective at any given now moment. Holding 1000 XRP in 2026 is not a handicap, it is a focused strike. When the price hits $5, $10, or even $20, the pressure to hold for the more becomes a physical weight. You start dreaming about what the money could buy, and that is exactly when you will freeze. You'll watch a $5,000 profit turn into $50 while you wait for a price target that might never come. This comparison proves that a disciplined 1000 XRP holder who exits at a 78.6 Fibonacci level actually keeps more cash than a 10,000 XRP holder who waits for the peak and misses it. Strategy beats volume every single time the market turns red. Size doesn't matter if your discipline is 0. In this cycle, the person with a mechanical plan is the real whale. You have the tokens. Now you just need the nerve to sell them. Waiting for a $100 XRP while the market is offering you a $10 exit is the fastest way to stay broke. Now, it's easy to get lost in the noise of price predictions, and right now in April 2026, the chatter is deafening. Some gurus will swear that we're going to be hitting triple digits, while the actual charts show a massive wall of resistance. Now, with a market cap hovering around $93 billion, jumping to $100 isn't just a rally, is it? It's going to be a total global financial takeover. Now, institutional players who jumped into this new ETFs, they aren't here for the diamond hand fantasies, no. They are here for calculated returns. They know that while the tech is solid, the math has to make sense. Look at the depth of the order books. At $1.44 and $1.76, there are billions of dollars in sell orders waiting to be filled. These aren't just speed bumps, they are massive liquidity walls where whales will dump their bags while retail is busy posting rocket ship emojis. Most retail traders, they will ignore these technical barriers because they're blinded by greed. They see the $1.5 billion in ETF inflows and they think that it is a straight line to the moon. But those inflows are sophisticated capitals, right? They buy the dips and they sell the rips. And if you're waiting for $50 while the smart money is exiting at $8, then you are not an investor. You are simply a donor. You're providing the exit liquidity that they need to lock in their gains, while you're left holding the bag that's rapidly losing value. The most fundamental rule of investing is the mean reversion. Every bubble since the South Sea bubble has always returned to its long-term trend, and the greater the height of the bubble, the more painful the return to reality will be for the participants who entered last, expecting gains to continue forever. History repeats itself because human nature never changes. In 2017 and 2021, the story was the same. People held through life-changing money because they thought it would never end. And by the time they realized the top was in, it was too late. The price was already halfway back to the floor. Now, the 2026 bull run will feel slightly different because of the institutional backing, but the psychology remains identical. When the news anchors start talking about crypto, the exit door is already closing. This is the Euphoria Index. It maps retail social media hype against the actual price peak. Notice how the highest levels of moon mentions always occur exactly when the chart starts to its final kind of parabolic move before a devastating crash. Selling when everyone else is screaming buy is the secret to wealth. So you do have to decide if you want to be right or if you want to be rich. You see, being right means waiting for the impossible price target just so that you can say you called it. Being rich means that you're taking your money and walking away while the rest of the world is still dreaming. The market doesn't really care about your goals or your ambitions or even your timeline. It only cares about the hard, cold numbers. And if you don't have a specific price where you're willing to walk away, then you've already lost the game. Now, with all of that in mind, it does raise a question, and you've got to be honest with yourself here. What is the exact dollar amount that would actually change your life today? And are you brave enough to sell when that chart hits it? Professional traders don't wait for the absolute top, they sell on the way up. And this is the mechanical math that they use to win. See, most people fail because they think that they're 1000 XRP as a single block. They think that they have to sell everything all at once. This is a trap, right? The first goal is not to get rich, it is to get safe. This is where the initial capital recovery, or ICR, comes in. If you bought your XRP at $1 and it hits $3 or $4, well, you are not just up, you're in a position of power. By selling just a portion of your bag early, you can pull your original risk off of the table, and suddenly the remaining tokens that you are playing with is just house money. This is the ICR mechanic. By selling 30% of your bag when the price hits 3 times multiple of your entry, well, you've recovered your initial investment. And even if the market crashes to zero the next day, then you haven't lost a single cent. This is how you remove the fear of your decision-making process. Once your initial capital is back in your back pocket, the psychological game changes. You stop panic checking the charts because you've already won. Now, we can move to the trenches system. Instead of guessing where the peak is, we can set 3 distinct exit zones based on the 2026 Fibonacci levels that we've been tracking. And if you want to master these technical levels for yourself, make sure to check out thecheekyschool.com, because we do have some free courses to get you started, plus 50% off code in the description for any of the professional programs. To be effective, you must not let your need to be right be more important than your need to find out what is true. If you are too proud of what you know or how good you are at something, you will learn less, make inferior decisions, and fall short of your potential. We divide the remaining 700 tokens into 3 buckets. The first zone is the conservative exit, usually around the previous all-time high. The second is the cycle target, where the massive ETF-driven demand meets historical resistance. The third would be the extreme zone, the area where the price goes parabolic. These are your 2026 exit trenches, right? They've mapped out 50%, 61.8, and the 78.6 Fibonacci extension levels. Now, by staggering your limit orders across these zones, you capture the average price of the bull run rather than gambling on a single volatile peak. Finally, we leave 10% of your moon bag, right, just in case the triple-digit theories actually come true. This ensures that you never feel the pain of selling too early while still being locked in for life-changing gains on the bulk of your position. The biggest threat to your XRP gains isn't the SEC anymore. It is Ripple's own stablecoin, RLUSD. But before we go any further, let's get one thing straight. I'm just a guy on YouTube. I am not a financial advisor. Now, this video today is for educational purposes only. Crypto markets, they are high risk, and you should never invest money that you are not prepared to lose. Now, we do have to talk about the cannibalization paradox. See, while the XRP ledger is hitting record transaction volumes in 2026, much of that activity is completely bypassing the XRP token. RLUSD has seen a staggering 1200% explosion in usage over the last year. Big banks want the speed of the ledger, but they can't handle price swings of a volatile asset. They want the dollar's stability with the ledger's speed. This visual tracks the utility shift. It shows how institutional settlement volume is migrating away from XRP and into RLUSD. Because banks can use the stablecoin for its fixed value, XRP is being used as a pass-through tool. It's held for milliseconds, which means it doesn't actually create the sticky demand needed to drive the price higher. If the actual utility moves to the stablecoin, well, the utility-driven price pump that everyone is waiting for might be a ghost. Now, Ripple is winning the corporate war here, but the token might be losing its primary job. And we are seeing a split in the ecosystem where the company's success no longer guarantees a higher token price. When the demand for the ledger grows but the demand for the token stays flat, those triple-digit targets, they start to look a bit like a fantasy. 2026 will be a record-breaking year for Ripple, and the company will continue to bridge the gap between traditional finance and decentralized finance, while focusing on low-cost speed and energy efficiency across the XRP ledger and expanding real-world use cases such as maintenance of land deed records. There is also a massive invisible wall made of human regret. Nearly 60% of the current XRP supply is still held by people who bought at a loss years ago. See, these legacy holders aren't looking for a moonshot anymore, they are looking for an escape. Now, they've been underwater for years and they are tired. The moment that the price gives them a chance to walk away without a loss, they will more than likely take it. This maps the underwater supply. It identifies huge clusters of tokens held between $1 and $2. As soon as the price hits these levels, these holders will probably dump their bags just to break even. This creates a massive ceiling of sell pressure that fresh investors have to chew through just to move the needle. This break-even wall is the final boss of the 2026 cycle. Every time the price tries to rally, a new wave of old holders hit their sell button. You need to decide if this new ETF money is strong enough to fight through billions of dollars in legacy sell orders while the utility shifts to a stablecoin. Your brain is hardwired to make you fail this cycle, and it'll use fear of missing out to burn your exit plan to the ground. See, when the price moves towards $10 or $15, logic exits the room. You'll start hearing stories about how XRP is the only asset that matters for the next century. This is the what-if demon taking over. See, it's the voice telling you that if you just wait one more day, you'll be a multi-millionaire. Well, the joint classification of XRP as a digital commodity by the SEC and CFTC on March 17, 2026 has only made this voice even louder. It feels like the floor is unbreakable. But that's exactly when the trap is set. Your brain on a pump is a major liability. This chart maps out the dopamine spikes in a trader's mind as the price climbs. It shows that as green candles get bigger, your biological urge to buy more increases, making it almost impossible to stick to a sell plan. To survive this, you've got to stop trading with your gut, right? Your emotions are just too loud when the candles are green. You need limit orders set on a solid platform before the madness hits. This is why I use an exchange redundancy strategy. I never keep everything in one spot. I use Kraken because they've stayed reliable during every major market crash so far. And if you're looking for a home for your bag, then they're offering 3% cashback on cash and crypto deposits for new users who sign up with my link that's in the pinned comment below. And in that comment, you'll find a list of other exchanges that I use as a part of my redundancy strategy. Go ahead and check it out. You're doing the same thing they did in the late 90s. You're rolling it. You think everybody is a genius in a bull market. One consequence could be that portfolio managers under pressure to keep up with their peers and the broader market plow money into the stocks and drive them even higher. I mean, think about what a red day actually feels like, right? We've seen 60% of the current supply held underwater by people who didn't sell the last peak. When the trend flips, those people will panic sell alongside you to avoid another 4 years of losses. If you haven't locked in your green, well, you're just going to watch life-changing gains evaporate in a matter of hours. You have to be okay with leaving some profit for the next person if it means securing your own financial freedom. This is the red day reality. It shows how a single 12-hour candle can wipe out months of steady gains. If your exit strategy isn't automated, you're betting your entire future on your ability to stay calm during a massive market collapse. You see, success in 2026 isn't just about being the smartest person on the internet. It is about being the most mechanical. The plan that you have right now is the only thing standing between you and another half-decade of waiting for a break-even point. Success isn't about hitting the exact peak of a price chart. It's about hitting the exact peak of your financial freedom. And we've spent years obsessing over the if and the when, but now that it's April 2026, the only question that really matters is how. You see, a 1,000 XRP portfolio with a mechanical plan, it beats a 10,000 XRP portfolio held by someone with no exit strategy. So you don't need to predict the future, you just need to be more disciplined than the crowd. Now this market, it does not owe you anything. The institutions are finally coming, and the regulations are set, right? The liquidity is moving. Now you have to decide if you're a spectator or a participant who actually keeps the prize. This is the freedom calculation. It breaks down what a 1,000 XRP bag looks like at $5, $10, and $15, comparing those totals to real-world milestones like debt relief or a house deposit. It grounds your digital gains in a more tangible, life-altering reality. When you see those numbers on a screen, they feel like a score in a video game. But their score can actually pay off your car or secure your family's future. You see, success is no longer just about hitting a candle top. It is about changing your financial reality. And if you have your exit prices written down today, then you are already ahead of the retail herd. You are not gambling on a miracle. You are simply executing a business plan. Wealth is assets that earn while you sleep. Wealth buys your freedom so that you don't have to wear a tie like a collar around your neck. so that you don't have to wake up at 7 a.m. to rush to work and sit in a commuting traffic, so that you don't have to waste your life grinding productive hours away into a soulless job. The network is growing and the global infrastructure is being rebuilt right in front of us. But your job isn't to hold the network's hand. Your job is to secure your future. Right? The market is a beast that rewards the cold and the calculated. This final look at the XRP ledger's 3 million daily transactions versus price potential highlights the gap between ledger utility and market value. It serves as a reminder that the tech is solid. The market does require its own specific execution strategy. The 2026 cycle won't last forever. When the euphoria fades and the charts turn red, you want to be the one sitting on the sidelines with a filled bank account. Don't wait for the markets to tell you that it is over. Decide your wealth now, right? Set your orders and walk away a winner. All right, guys, just going to step away from the script for a moment. I want to just kind of, I have loaded comments up, but I want to just kind of talk about something that was in the script, because I'm like reading it and I'm recording it and, you know, going to edit it all up and put it all out and all that kind of stuff. But it comes across overly maybe negative towards XRP, and that's not really the intention here. The point of the video is to kind of demonstrate that you should always have an exit strategy, right? You shouldn't be just hoping for, you know, 3 or 4 digit XRP price targets. Now, there's 2 things I want to address, right? The first one is RLUSD as a stablecoin and XRP, right? Now, I know I talk about in this video, and I talk about it in a lot of the videos as well, about cannibalization. Right? It does happen to a degree, but it's not as bad as maybe I was alluding to during the video, right? So every video, I try to put in a counter argument. How would a skeptic look at the XRP ledger? And that's essentially what that whole section was about. It was basically taking a different angle, a different approach, looking at it through a different lens. And when we're kind of looking at it like that, it comes across like, oh my God, XRP is completely redundant. RLUSD is the solution to everything. And that is simply not true, right? It is how a skeptic would look at it. It's looking, critics would look at the market like that, right? They think a stablecoin is solving all the problems, but that's not technically true. And I went through this in many of the other videos, but basically a stablecoin is basically just a tokenized version of a dollar, of fiat currency. It doesn't solve the current problem that fiat currency has, right? The Nostro Vostro accounts parked everywhere. So RLUSD isn't necessarily cannibalizing XRP's use case. It's, in fact, what it's doing is actually enhancing, keeping it all within one ecosystem. It means that with everything going on with Ripple Prime and so forth, and all the treasury and all of the other kind of acquisitions that Ripple's been making, it basically means that Ripple's built a product or a series of products, a suite of products where institutional capital can stay. They can come in using RLUSD. They can send that to other American companies that want to accept dollars. But the second that they want to move out of a dollar and go into a different tokenized fiat currency like the euro or the pound sterling or the Australian dollar or, you know, the Japanese yen, whatever it might be, right? You're going to need to bridge that gap. And that's where XRP comes in. So I wanted to kind of talk about that. That was the first thing. The second thing that I mentioned in the video that maybe comes across overly negative is the price targets, right? Now, a lot of people are true believers in $100, $1,000, $10,000 XRP. Now, I am somewhere in the middle of all of that, right? Do I believe that we're going to see in 2026, this year, three-digit XRP? No. I think that we are going to kind of peak out probably in $10 to $20 ranges, something like that. But can I see a 2030, a future where we have a 3-digit XRP, $100 plus XRP? I do think that in the next kind of 5-10 years, that is a high probability. Likewise, we can start talking about $1,000 XRP or $10,000 XRP. Given enough time, I think the price will have to gravitate there. If, of course, Ripple and the actual ledger are successful in what they are trying to do, which is, of course, to bring all of that liquidity of the real world onto the ledger. Now, it's a big ask, but it is not impossible. A lot of people think market cap is a barrier to price discovery, but market cap is simply a calculation of price, meaning that if the market cap was to block the price, it would create a circular calculation. If price dictates the market cap cannot dictate the price, right? It would just go round in circles, it would break. So understanding what drives price, supply, demand, right, or value and utility is actually more important than thinking that market cap cannot exceed, the entire world's GDP, for example, right? Because these things are not realistic. In the same way that people did not think that we're ever going to get a stock market with a company worth $1 trillion, yet here we are, right? So understanding these things is quite important. So I just wanted to spend a little bit of time here. I know I normally would kind of jump into the comments or put some outtakes in. But I wanted to just kind of clarify those couple of points in the video. The video is really about making sure that you have a strategy, and it didn't maybe come across overly negative. That's not my intention, but the intention was to make sure that everybody has a thought process on how they are going to lock in gains and not hold forever. Now, of course, if your strategy is to hold out until 2030, that is a strategy and you can keep that, right? My point is that if you're thinking about moonshots in this particular cycle, maybe this year you've got a short time horizon, then you should be grounded in reality and you should lock in the gains to you when that opportunity comes. Anyway, I just wanted to kind of clear that up. Or now you can watch the video that is queued up on the screen.